Okay, so you're going to bring that in. All right, thanks as always for joining us, Dr. Miller.
Thank you.
Good stuff. All right. 1250 wins, WHNZ, Evan and Deb in the evenings. Reverse mortgages have been in the news in a big way over the last year. You know, there's always been questions, good and bad, but I think it depends on the situation. We've got Donna Moore with us. Donna, welcome to Evan and Deb in the evenings.
Hi, how are you?
Good, thanks. And you?
Oh, fine. Trying to stay warm.
So there's been a lot of new in the reverse mortgage business. Isn't that true?
Yes, there has been a lot of things new in the business. For a while, FHA was questioning whether they were even going to continue the program. They want to build their funds. But as most people know, the money doesn't come from FHA. It's an FHA-insured program. And so they decided that so many seniors reaped the benefits of the program that they kept it. And that was something that was big news at the National Reverse Mortgage Lenders Association conference in November.
Okay. So there's enough people that do like it. It is beneficial. It just had to be reworked a little bit, some things ironed out.
Yes. The new things are that it's more flexible now. It used to be that if you did a fixed rate product, you had to take all of the funds at closing. And, of course, that meant that you started out with a fairly large debt already. And, of course, you were accruing interest on that money from the day that you started. But now you don't have to do that any longer. You can do a fixed rate, and you no longer are required to take all the funds. And you can have a fixed rate with monthly payments.
Okay.
There's a lot of options now that weren't available before, and FHA now will accept a much lower upfront fee because with any FHA-insured mortgage, you have a mortgage insurance premium that gets charged at the date that you start the mortgage at closing. And this has been lowered considerably. People will be very, very surprised at how much lower it is if they look at it now and they looked at it previously.
All right. Well, let's talk a lot about reverse mortgages. Anybody got a question out there? 727-897-8255. That's 877-897-8255. 877-897-8255. If you got a question for Donna, it's 1250 wins WHNZ. We're talking to Donna Moore. AreYou62Yet.com is her website. AreYou62Yet.com. Evan and Deb in the evenings, 12. Reverse mortgages. You know, is it right for you? Is it right for your parents, maybe? That's what we're talking about right now. Donna Moore is with us. She's an expert, RU62, and it's the number 62yet.com is her website. So when you look at it, like you said, Donna, there's a lot of changes that have come to reverse mortgages. It's a lot different than it was when they first started. So how do you decide whether a reverse mortgage is right for that homeowner?
Well, I always sit down and find out their real situation and the reason why they're doing it. A lot of people now use them to plan for their future. Even financial planners and financial advisors are recommending the program to more wealthy clients that lets them delay using their 401ks or their stock funds. I had one gentleman who every month was taking a somewhat large draw out of his 401k to make his mortgage payment. He lived in a very nice, affluent community, and he wanted to continue to live there. His financial advisor told him he should look into doing a reverse mortgage to eliminate his mortgage so that he could leave more of his other assets intact. And then I review what their other situation is, if they're on financial assistance, what their other options are. You know, maybe it's not a good idea for them to stay in their home. Sometimes that is the case. I had one gentleman who could live very easily on the income that he had, and his house was completely paid off, but he had a large credit card debt. And for that particular person, I discouraged him from doing the reverse mortgage. He did not do it. I felt that using it to pay off the credit card debt at his age was not a good choice for him. But each person is individual,
Right.
and a lot of things come into play. And so you need to spend time with the person that you choose to work with and tell them your entire situation. Don't be embarrassed, and let them get to know you.
Right. Well, and that's the thing. I mean, so you have to have a trusted advisor, not someone that just wants the commission.
Absolutely. I had an interesting incident recently where I sent out my annual holiday letter to everyone who's ever contacted me or has done a reverse mortgage with me. And I got a call 2 days later from a woman over in Ormond Beach. She was the stepdaughter of a gentleman who I sent the letter to. She informed me that he had died and he had done a reverse mortgage. I did not originate it.
Okay.
Someone else did. And the situation was that he had appointed a caregiver as his power of attorney, and she took off with the money. But that was her plan all along. And I realized when I spoke with her that it had raised big red flags with this woman when I said, I meet every one of my clients. I come to their home, I get to know them before we proceed. And
Right.
of course, this was something that the caregiver did not want because she was trying to commit fraud.
Right. Wow, that's some serious stuff. So now people figure, okay, I've got a home, a single standing home. I could do a reverse mortgage. How about condominiums?
Condominiums are another story. Oh, about 4 or 5 years ago, things changed in the condominium world, and as you know, a lot of them went down in value. So that's not to say that you can't do a condominium, but it is a long procedure unless your condominium complex is already on the FHA approved list. There is a list available on the FHA website, and it's accessible to anyone. So they can go to that site. If they need information, they can always contact me, but it will tell them if their condo is currently approved. And if it is, that's great news because then it's a very easy process.
Wow. Very interesting. Now, can people that are on government assistance get a reverse mortgage?
Yes, they can. They need to be upfront about their situation because they don't want to take all of the funds at closing because that would jeopardize those funds. But that's where when you work with someone who knows the program, they help you to structure the loan to maximize your benefits and keep them safe. You don't want to jeopardize that assistance because they're used to getting it. And this is just another safety net for them.
Okay. Very, very interesting stuff. I mean, so then once you start taking your reverse mortgage, like you said early on, you have a choice. So you could take a lump sum or you could take a payout. It really sort of depends on your situation and your comfort level with how you want to take the money, right?
Absolutely. You can, of course, if you have a current mortgage, you're going to have to qualify for enough to pay off that mortgage. Otherwise, you won't qualify. And the commercials on TV that you see are somewhat misleading. Some of them are very factual, but when people say you're already qualified, that's not necessarily true. You do have to be 62. The youngest person on the title needs to be 62 or older.
Okay.
And there are other guidelines as well, although it's not credit score based. If you've ever signed for a student loan, a government student loan for any of your children, and they're in default, you will not qualify until that is brought current. And I've seen more of that in the last 2 years. If you have any type of government loan that you're in default on, then you won't qualify until that's brought current.
Wow.
So I always tell people, I would hesitate before I'd be co-signing for any government loans because you just don't know what the future brings for those.
Well, and unfortunately, you can't rely on other people. They could just say, "Hey, I'm gonna stick it to Dad."
Absolutely, absolutely. And they go about living their lives and sometimes very lavishly.
Yeah, it's really unfortunate. And so now, so let me ask you this: so a couple takes out a reverse mortgage, right? And or let's say just the husband is on the reverse mortgage, and he passes away. What happens with the wife and the reverse mortgage?
Okay, well, unfortunately, if she was not on title, then the loan is called, and she would have to find a way to refinance that loan, qualify for one herself. If she was on title, so she was old enough to participate in the loan, over 62, the loan would have been based on the youngest person on title age.
Okay.
And so if a husband is 70 and the wife is 64, then it's going to be based on the age of the 64-year-old.
So,
if one of them passes away and they were both on the title, it does not affect the mortgage at all, even if it was the younger person that passes away.
okay.
The mortgage continues, and the funds continue if you took a payoff or a payout, a monthly payout, that would continue. If you had a line of credit, that would continue. And with the line of credit on a reverse mortgage, the line of credit grows versus a line of credit at your bank where it's a stagnant amount. You have $50,000, you take out $20,000, and now you have a payment that's due. With a reverse mortgage, if you start out with $50,000, which would be a small start out, and you don't use the funds, the next year you would have access to more funds. And if you took out $20,000, you would still have the remainder, you would have no payment, and the remainder in that line of credit would still continue to grow.
And then basically, at that point, you don't have a payment at all, do you? And when you pass away, or let's say you want to sell the home because you have to live there during that time, let's say, Dad goes into a nursing home, then you get your share plus the interest, right? The principal and the interest.
What you get is your share after the loan has been paid off.
Okay, gotcha.
So if Dad passes away, you would then get your share of what's left from what he spent and the accrued interest.
Gotcha. All right.
So he, if he didn't spend a lot, then you're going to get more. If the housing market went up, you're going to get more. If the housing market went down, of course, you're going to get less.
Well, I'm sure any of our listeners are interested in a reverse mortgage. You've probably got even more questions, and this is what you do. Call Donna at 800-540-3259, 800-540-3259, and her website is ru62, the numbers, yet.com, ru62yet.com, and she can answer all the questions you have. Very reliable person, it sounds like to me. I got to tell you, Donna, if I was going to do business, it would be with someone like you. I want to thank you for joining us tonight.
Oh, thank you. I appreciate it.
All right. Take care. That's Donna Moore. ru62yet.com is a website to find out more about reverse mortgages. All right.